Kitco News, special coverage of the Deutsche Goldmesse, is brought to you by O3 Mining.
Inflation made headlines in November, but our guest, Thorsten Polleit, chief economist at Degussa, he says that inflation pressures have been building for many months now. Thorsten, welcome to Kitco.
Thank you very much for the invitation. It's great to be here.
Talk about these pressures that have been building up.
For instance, in the US, the Federal Reserve has increased the money stock M2 by roughly 36% since 2020. And this is a huge monetary overhang, and this excess liquidity is now driving up goods prices, consumer goods prices, as well as assets prices. As you know, housing prices, stock market prices all go up, and this is driven by this excess liquidity caused by the Fed.
But this all came to a head, it seems like last week when we saw those CPI numbers that came out.
Well, it's still to be seen whether this is the end of spiking inflation. I'm less optimistic. I think there are other factors that drive prices further up. The energy price shock all around the world is most likely to show up in even further rising prices. So inflation is not over. I think it's getting worse, especially so because central banks keep their excessive monetary policy in place.
I assume you're decidedly not in the transitory camp.
No, certainly not. Because, as I said, the monetary overhang is huge. In the US, roughly 20%, I guess. In the euro area, it's around about 17%. And again, there is an economic law, and that says if there's too much money chasing too few goods, prices go up. And this is now unfolding. It's not transitory. And especially so because central banks don't abandon this inflationary policy.
Well, how bad are these pressures going to get? What do you see inflation looking forward?
In the coming 2 to 3 years in the US, I can imagine that inflation will be roughly between 4 and 6% on the consumer price. As far as consumer prices are concerned, stock markets will continue to rise, housing prices will go up. So far, I don't see really an end to this upward trend in prices.
Investors out there that are cognizant of what's happened with inflation, currently, what are they doing right now? Would you say that they're protecting themselves against inflation that they're doing? And then I guess the follow-up question on that, what would be the best strategy for them?
I think inflation is still underestimated. This is what I get from discussions with investors in Europe and in the US. People think that inflation is transitory. They believe in what central banks are telling them. But as I said, I think I'm less optimistic, and I give you some reasons why inflation is going to remain a big problem. What can you do? Well, the first thing you can do is to reduce your cash balances, to get out of the US dollar, to get out of euro and Japanese yen, to get out of these fiat currencies. The stock market is one option you have. Housing, real estate is certainly an option, and also precious metals as part of your liquid portfolio.
You say that there's not a wide appreciation of what is happening with inflation right now.
Yes, that's my impression. Yeah. That one reason may be that people still have great confidence in central banks. They believe that central banks are eager to keep inflation low or to fight inflation. And I would argue central banks cause inflation. And at the moment, the overall debt level in the global economy is at a record high. And politicians have discovered that the real debt burden can be reduced by ramping up inflation. And this is what central banks are doing right now. It's a policy deliberately debasing the purchasing power of money.
Expand on that right now. Why would they be directly causing inflation? You're talking again about the debasing of the currency.
Well, inflation in the short run helps to prop up economic growth, to help keep employment at a relatively high level. First, you get the benefits, and later on, the costs of higher inflation show up. Namely, the economic system gets distorted, savings are getting destroyed. But we live in a world where people, the people in governments as well as people in general, consider the policy of inflation as the policy of the least evil.
Now, Thorsten, we have seen people that have been protecting themselves from inflation with crypto. This is something that has come up, and then we've seen really the big run-up in Bitcoin. What is the flaw in terms of people using Bitcoin to protect themselves from inflation?
Well, they did fantastic. I think it was a great trade. Yeah. Certainly not only protecting them against inflation.
Trade aside, though, but is it something that can protect you from inflation?
Well, so far it has, and it has also increased the real wealth of those holding Bitcoin and other crypto units. Going forward, I think we are going to witness a process in which all kinds of prices will move further up. And at the moment, I think gold and silver are underestimated, undervalued, and I think this is an area where there's strong upward price potential. And I would recommend to institutional investors as well as private people to keep at least a part of their portfolio in the liquid means in physical gold and silver.
What should be their expectations of holding gold? Like in terms of like if I'm holding it right now, it's just going to be an inflation hedge for me. Is that correct?
Yes, I would think so. Just to give you some numbers, from 1975, if you allow, look back a bit, until 2020, the annual gold price increase was 8.2% on average. That clearly outperformed the dollar. It was only slightly below the stock market return. The same can be observed in the last 20 years. And looking forward, I think I'm quite confident, I may say, that gold will, of course, shield people against the inflationary policies. And having said that, I think gold is going to remain a solid inflation hedge.
We're right now, we started the fall in about the 1700s for gold. We're currently right now about at the mid 1800s. Where do you see gold heading from here?
Well, at the moment, as I said, I think people underappreciate gold and silver, and that shows up in dampened prices. I think gold and silver have considerable upward price potential. Coming up with a number is a difficult thing, but I wouldn't be surprised if we go above $2,000 per ounce in a relatively short period of time.
How about other pieces that benefit from gold right now, either looking at the juniors or the minors? Are those other options that are looked at, or should they be looked at differently in terms of somebody that might be looking for an inflation hedge?
Well, gold and mining stocks are different things. If you buy a mining stock, you buy a business, and the business depends on a management decision, on making good decisions in that firm. And so if you are convinced that you have a great management team in a certain mining company and the valuation is decent, it's certainly a good investment. But if you don't have an idea of what's going on in a certain mining firm, you should be cautious, I would say. Just buying physical gold, I think, is the easiest way to participate in what's happening in the precious metals market and to get an insurance against the vagaries of the fiat money regime.
Thorsten, thank you very much for your time.
Thank you very much for the invitation.
Stay tuned for more videos from Deutsche Goldmesse. My name is Michael McCrae.
Kitco News, special coverage of the Deutsche Goldmesse is brought to you by O3 Mining.